Hello everyone, welcome to the channel. Our discussion with respect to whatever we discussed as part of weekend, as part of narrative building, it was completely thrown out of the window because of the news which was happening. I told one point very clearly that this region is a demand, and if market opens somewhere flat or small gap down, we need to see a positive reaction. And I also told, like, because of the news, because of the Iran war and US war which is happening, market can go down also. See what happened in the market opened pretty big gap down today, and market came up. Why did market come up? Understand, whenever during expiry, if market opens pretty big gap down, sellers wanted to have a pretty good price to start entering into call selling positions. This is what will happen always. If you take previous chart examples also, you can always see that whenever expiry days come in, like for example, if I take you back to this example, right? So market opened pretty big gap up on Tuesday, and there was already sellers who initiated here because of the good price which they got, right? But when it comes to today, market opened pretty big gap down, okay? And when market opens pretty big gap down, CE value will be very low, right? The CE value of 25,200, for example, which was there in closing, will be hard to hard, like 10 rupees or 20 rupees at the time of opening, even lesser, right? When the market gives a pretty big drive up like this in the first 15-20 minutes, so 30 minutes, then sellers will have a very good price for CE. They will have somewhere around 60 to 70 or 80 price here, and then they will start shorting. And where will buyers enter? Buyers need some kind of a reaction in the market. Always understand one point: if you are trading anywhere here in this region, this is all a place of where orders are not present. Where are orders present? Orders are present only at the reversals, wherever market is there, or demand zones or supply zones, wherever market will have, right? What is a reaction point I'm saying is, take the low for example. The moment we see this closure and a significant drive up, this means market is not ready to go down and buyers are stepping in here. So the moment we see this kind of a big movement, we can easily see in a 5 minutes time frame that there is a change of character. Whenever we see a change of character, what we do immediately is we mark this candle as our demand. The moment market taps in here, we enter call and we capture this position. This is the only tradable opportunity which we had for today, right? Anyways, moving on. If you had captured this move, good for you. If you had traded this and made profit, I'm asking you one question: what was the reasoning for your trade? Because you did not enter from a supply, market started falling down and you entered blindly. And if you had made profit, good for you. If you had made loss, tell me what is the reason for you to make loss. There are few points which I would like to emphasize in this video a lot. Okay, so what are those few points? Is there are significant trading problems which many people will have. One is over trading, right? People, once they have a loss, they will tend to over trade, and they will make sure that they wanted to make the loss even, and at least make sure that they are making some kind of a profit, right? Second problem which people will generally have is they wanted to see a defined profit to be achieved on a daily basis. The moment you set this kind of a defined profit, right, what will happen is the mind will not accept. For example, if you have a defined profit of making 10k per day, okay, and the moment you make 7k, your mind will think like, let me make another 3 more thousand, right? That is where the problem will start. If you have this kind of a defined mindset, you will be forced to re-enter into the market, and you will end up losing the 7k and also lose additional amount. Trust me, this used to happen with me as well in the past, and I wanted you to come out of these kind of a problems whichever you have. The third problem which most people will have is they will enter blindly. You need to study in the market. You need to understand how the market works. You need to understand how the entire trading psychology between buyers and sellers works. Otherwise, it will be very tough. For you, I have a specific course. I will put a card in the top of this video, and I also put the course description in the description part of this video as well. If you are interested, please spend time to study in the market before even entering into the market. See, anyone can trade. Okay, anyone can trade. Only thing is, if you wanted to become a profitable trader, you need to understand where to enter, what is going to be your stop loss, what is going to be your target, what is the reasoning behind the trade. If you have these 3 points clear, right, nobody can stop you from making profits. Okay, so let's see in a higher time frame how the market works before we move on to the next significant phase of price action. So we anticipated the market to come down. It has come down, and it is reacting from this demand, right? So what do I mean by reacting from a demand? Market has come down all the way, market went up, right? Market came down again. Now the moment market gives a closure above this, market can go all the way up here. Okay, there is no stopping for the market to go even higher, even to higher ranges till here to the upcoming weeks. It doesn't mean that you have to enter into the maximum quantity. Always keep your lot sizes and risk appetite to the maximum which you can bear. Okay, so what do I mean by the levels is like, we need closures, significant closures above today's significant high point. That is, the moment we see closures above 25 or 26,000, 25,000 to be very precise. And if the market sustains about 25,000, we can see on a small pullback, we can take the market higher all the way till 25,500 also. This is not possible in one single day. Always make sure that you capture 100 points in this move and start trailing after every 100 points. Okay, the immediate first target which we can see on the upside is 25,160 ish. This open gap which we have, we can take the market till this gap. Post that, we can, once the market sustains above this gap, we can take the market even higher. Okay, keeping the video short, if you like the analysis, make sure to like the video, subscribe to the channel, follow for more such educational content. Thank you so much for watching. We'll meet in the next education video.